Morning, friends. Welcome to Veranda CA's session on RTP questions for CA final. So, we are going to see certain questions relating to directors, uh, and some of it is going to be on drafting of resolutions. Some of it is going to be on penalties and procedures. The question that we are going to see is going to be very elaborate. So, I want every one of you to devote utmost attention when you read the question. Mr. Samir is holding 15% shares of TOV Limited. It is an unlisted company as of 30th September 2019. And his holding is unpaid to the extent of 10 lakhs. He filed a petition with the tribunal on 5th April 2020 for winding up, and a copy of the same was filed with the registrar. The registrar has submitted his view to the National Company Law Tribunal on 18th May. See, the petition was filed on 5th April, but the National Company Law Tribunal has taken it up from the registrar on 18th May. The ROC mentioned that it was just an equitable that it should be wound up on the analysis of information. That is, there is one clause which says that a company can be wound up where the NCLT is of the opinion that it is just an equitable that it should be wound up. Therefore, the tribunal appoints Mr. Raj on 20th May without giving notice of the same as well as affording opportunity to the company. The NCLT on its own accord has appointed Mr. Raj as the liquidator. Mr. Raj is also an insolvency professional under the IBC and has filed a declaration regarding his independence on 25th May. The tribunal passed its order for winding up on 16th June, and the provisional liquidator Raj was appointed as the company's liquidator. The tribunal directed Samir to deposit 1 lakh as security for cost as a precondition to the issue of directions. Please note that the person who has filed a complaint before the NCLT has unpaid amounts of 10 lakh, plus the tribunal now additionally directs him to pay 1 more lakh towards cost. The intimation thereof of passing the order was sent to Raj as well as to the registrar of companies by the tribunal. The registrar of companies, on receipt of the order from the tribunal, made an endorsement to this effect in the record of TOV Limited and also made a notification for winding up of the company. Mr. Raj calculates that the outstanding liabilities and debts owed, which amounted to 70 lakhs, and the expenses of winding up amounts to 3 lakh. TOV Limited has at present 8 members holding shares, and it is unpaid to the extent of 40 lakhs. Following were the past members of the company. Mr. Kishan, he ceased on 23rd March 2019 and has unpaid shares to the extent of 8 lakhs. At the time when Kishan ceased to be a member, the outstanding liabilities of the company were only 5 lakh. Mr. Dhawan ceased to be a member on 28th May 2019, where TOV Limited has unpaid calls to the extent of 16 lakhs. And when he ceased to be a member, the outstanding liability of the company was only 13 lakhs. Mr. Tanmay, who ceased to be a member on 17th June, have to pay 15 lakhs. At the time when Tanmay ceased, the outstanding liabilities were only 10 lakhs. The company created a floating charge on 23rd August to secure a current account with Munim Bank, was in debit of 20 lakh from 1st May 2019, and thereafter the bank has also advanced 15 lakhs for meeting the operating expenses. The bank has charged 1,18,000 as interest for the financial year, and it debited the company's account to the extent of 27 lakhs. TOV Limited remained solvent during the financial year 2019. The question here is whether Mr. Samir was eligible to file a petition for winding up. The option that is available is no, as he is not holding fully paid shares. No, as he is not holding shares 12 months prior to petition being presented. Yes, as he holds 10% or he not less than 10% of the shares of TOV Limited. Yes, as he is holding shares 6 months prior to presenting such petition. So, in the whole question, if you see, the first question relates to the whole problem that we had seen. The first question relates to Samir's eligibility to file a petition. So, as you had seen in the past, Mr. Samir was holding shares, but he also had unpaid shares to certain extent of 10 lakhs. So, when a person is holding unpaid shares, is he entitled to make a petition before the National Company Law Tribunal is the question. So, as you are aware that the provisions on winding up of companies under the Companies Act of 2013 never talks about fully paid shares. It only says if a person holds shares, it never said fully paid shares. If a person holds shares for a period of 6 months or more prior to winding up, prior to presenting a petition on winding up, he is entitled to make a petition before the company law tribunal for winding up of the company. So just because that he is not holding a fully paid share, that doesn't mean that he cannot present a petition for winding up of the company. Therefore, in the instant case, even though Mr. Samir had unpaid shares, since he was holding the shares for 6 months or more prior to winding up, prior to presenting the petition for winding up of the company, he is entitled to make, notwithstanding the fact that shares were remaining unpaid. He's made the calls money to certain extent. So he's been allotted shares. The wording used in the section is he must be holding shares. The moment shares are allotted, it means that the contractual obligation between the company and the member comes into existence. And therefore, the moment of allotment, he becomes a shareholder. So therefore, whether it is fully paid or not, irrespective of the payment status, the moment it is allotted, he becomes entitled to. However, he must be holding shares for 6 months or more prior to presenting the petition for winding up. Therefore, the answer to this question is he is entitled to, because he was holding shares for 6 months prior to filing the petition for winding up with the National Company Law Tribunal. Any doubts in this question? Since there are limited members, can you either say yes or make a mention in the chat box that you have understood the question and the answer. So only if you understand, I'll move over to the next question. So I get a message in the chat box that it is understood. So therefore, I'm moving over to the next question. What was the last date available with ROC to submit his view to NCLT on the petition filed by Samir and with NCLT passed order for winding up respectively? 5th June and 5th July, 4th June and 4th July, 5th May and 5th July, 5th May and 4th July. So the question is, what is the last day within which it has to be filed? That is, a petition has been filed. So the ROC has to submit its views to NCLT within what time that the ROC has the time to file, and within what time NCLT has to pass an order. So in this case, let's understand one thing very clearly. As you're aware, I'll have to shift over to the previous slides for making you understand the timelines. So therefore, I'm moving slides little over, to the first one and second one simultaneously. So don't mistake me. We'll come to this slide again. Raj filed it with the National Company Law Tribunal on 5th April, but ROC submitted their views on 18th May. So typically, the moment the ROC thing is filed with the tribunal in the ROC, it is the duty of the ROC to submit its views within 1 month. If it is 5th April, then it should have been by 15th May. Here, 5th April means 5th May. Here, the petition has been filed on 18th May. So there has been a delay. So is the delay permissible under the law is the question. So if it is within 30 days, then the registrar should have filed. Sorry, it is 60 days, not that. That is, to file it with the registrar, it is 30 days. That is, the registrar or the company, it should be within 30 days. And the registrar has a time within 30 days to submit it to NCLT. So in this instant case, if you look at, the registrar has filed beyond, the registrar has filed it beyond the due date. So therefore, the registrar is required to initially file it within 1 month and thereafter for an extended period. So the extended period should be recorded in writing as to why such a thing was made. So in the instant case, the question is whether the registrar has time. The registrar under the law has time to extend it for some more period to submit his report if he is of the opinion that some additional information is required, and therefore he gets another 30 days. So therefore, in the instant case, he has time till 4th June, and from 4th June, within 1 month, NCLT has to file, pass the order for winding up. NCLT may, for reasons in writing or for sufficient cost being shown, may extend this date also. However, for the purposes of this question, there is a time of 30 days and an extension of 30 days. So therefore, the maximum due date is 4th June. And within 4th July, the NCLT has to pass an order for winding up. So therefore, typically we have 30 plus 30 days plus another 30 days for NCLT to pass the order for winding up. So therefore, in this question, the due date is 4th June because it was filed on 5th April. So you have 30 days, which comes to 4th June. And from there, it is 1 month, though you have 4th July for NCLT. Any doubts in this question? Any doubts? Any doubts? Yeah. So we'll go to the next question. Whether the act of tribunal can be considered valid for not giving notice of appointment of provisional liquidator Mr. Raj, as well as an opportunity for making representation to TOV Limited. Partly invalid, as notice of giving appointment is mandatory for the tribunal. However, whether to afford an opportunity is upon the sole discretion of the tribunal. The next option is valid if in the opinion of tribunal for reasons recorded in writing for not giving a case of opportunity of being heard. Valid if in the opinion of tribunal there were special reasons for not giving opportunity for making representations to TOV Limited. Not valid as the appointment of provisional liquidator as well as is mandatorily required to be given by the tribunal. So in this question, it is very clear that the tribunal has acted upon the appointment of the liquidator within the timelines. However, it is at the discretion of the tribunal for special reasons to be recorded in writing. Please note that it should be recorded in writing. Without recording in writing, it cannot pass an order. See, if you see point B, option B and option C looks very similar. However, the point is that the reasons must be recorded in writing is mandatory. However, the tribunal can appoint a liquidator without giving an opportunity of being heard, but it cannot do so without putting it in writing. If you see B, option B here, whether recorded in writing or not is given, whereas in C, for reasons recorded in writing is mandatory. So therefore, the tribunal has powers to appoint liquidator without giving notice. However, for special reasons, it can do so, and the reasons must be recorded in writing, which is mandatory. To give an opportunity is not mandatory. To the other party to be heard is not mandatory. However, that I am not giving reasons to being heard, but there are special reasons for which I am doing it has to be recorded in writing by the NCLT. Any doubts in this? Any doubts? Thank you. How much amount Mr. Kishan, Mr. Dhawan, and Mr. Dhawan and Mr. Tanmay would be liable to pay as contributory in case the tribunal calls the past members to satisfy the contribution? See, the question here is, who is a contributory? Contributory is any person who is liable to pay to the company at the time of winding up of the company for the settlement of debts. Here, as you may be aware, that all the members are liable to pay a few amounts because it remaining unpaid. Let's see what are those and then come to the question again. Kishan ceased to be a member on 23rd March and unpaid is 8 lakhs. At that time, it was the outstanding liability was only 5 lakhs. Dhawan on 28th May and the outstanding amount is 16 lakhs. And Tanmay 15 lakhs he owes to the company. At that time, the outstanding liabilities were 10 lakhs. So, in the instant case that we see, how much is the contribution to be made by each of those person is to be understood very clearly. So, let's see what are the options available. Mr. Kishan shall not be liable to pay. Mr. Dhawan and Tanmay shall be liable to pay 16 lakhs and 10 lakhs. Mr. Kishan, Dhawan and Tanmay is liable to pay 5, 13 and 10 lakhs. Mr. Kishan shall not be liable. However, Mr. Dhawan and Tanmay shall be liable to pay 13 and 10 lakhs. Mr. Kishan and Dhawan shall not be liable to pay and Tanmay is liable to pay 10 lakhs. Here, the question is that Mr. Kishan is not liable to pay the amount because he was not there prior to 1 year of filing a petition for winding up, and therefore Kishan shall not be liable to pay. However, Dhawan and Tanmay is required to pay to the assets of the company to the extent of what they are liable to pay and what they have agreed to pay. This is called the concept of limited liability. In a company form of organization, the member is liable to contribute to the extent of liability that is remaining unpaid from him. That is what he is agreed to pay, not what the company dues. No, that's not the case. Whatever is the liability that the member has agreed to pay to the company, which is nothing but the extent of unpaid shares, is what is the liability from the company, from the member to the company. So in this case, because Kishan was holding shares 1 year prior to that, he will not be called to pay. However, Dhawan and Tanmay are holding shares for a period less than 1 year, and therefore, under the law, they are liable to pay to the extent of amount that is remaining unpaid from both of them. So in this case, Dhawan is to pay 13 lakhs, Tanmay is to pay 10 lakhs to the company, because that is the liability which is remaining unpaid from their side. That is, out of the shares that they hold, this amount is remaining unpaid, and therefore they can be called by the liquidator to pay only to the extent of this and not to the extent of debt owed by the company. See, if you see in the question, Kishan, Dhawan and Tanmay were required to pay some amount from them, but at that point in time, the outstanding liabilities were different. The outstanding liability is nothing but the company's liability to an outsider. That is not what is to be contributed. The contributor is required to contribute only to the extent of what they have agreed to pay, which is nothing but the unpaid amounts, which is 13 lakhs and 10 lakhs respectively. And the payment must have been, they should have been shareholders for a period of less than 1 year. And therefore, Kishan, who held shares 1 year prior to that, he is out of the liability box. Whereas Dhawan and Tanmay were holding shares for a period of less than 1 year, and the amount remaining unpaid on the share is 13 lakhs and 10 lakhs respectively. They are liable to pay to the extent of 13 lakhs and 10 lakhs as contributories at the time of winding up of the company. Any doubts in this? Any doubts? Any doubts? Okay, so we'll go to the next question. How much amount of floating charge created on TOW Limited shall be valid, and how much of interest shall be allowed if no other rate is notified by the central government other than the rate prescribed? So the question here is, what is the extent of floating charge? The extent of floating charge is restricted to the extent of what has been created, and the floating charge is only to the extent of value of assets, and the interest shall be the rate as is applicable to the company for the time being as approved between the banker and the company, and if no other rate is prescribed, then the so let's move over to the other question. XY XYZ Limited is being wound up by the tribunal. All the assets of the company have been charged to the company's bankers, to whom the company owes 5 crores. The company owes the following amounts to others. Workers due is 1 crore 25 lakhs. Government due is 30 lakhs. Unsecured creditor is 60 lakhs. You are required to compute with reference to the provisions of the Companies Act the amount each kind of creditor is likely to get if the amount realized by the official by the selling of secured assets and the amount available for distribution is only 4 crores. So the question here is that the company owes to bankers rupees 5 crore. The workers due is 1 crore 25 lakhs. As you are aware that in the event of winding up of the company, the first and foremost preference is given to workmen's share. So 326 talks about overriding preferential payment. That is, every secured creditor shall be deemed to be a creditor pari passu in favor of the workmen to the extent of their portion. So it's very clear that the first payment is always to the workmen's due and to the secured creditor and balance to other people who are entitled to get that amount. So what is the workman share to secured assets? What is the amount realized into the outstanding due of workmen divided by workman due plus secured loan, which is simple, that workman due is X, the secured loan is Y, X divided by X plus Y into the amount realized. Simple. Whatever is the amount realized, the portion of workman due divided by workman due plus secured loans, because the Act says the workman due and the secured creditor shall rank pari passu. Pari passu means equal ranking. So therefore, the workman due is amount realized into workman due divided by workman due plus secured loans. So in this case, the workman due is 1 crore 25 lakhs. The amount realized is 4 crore. The company owes 5 crore to secured creditors. So the amount is nothing but 4 crore into 1 crore 25 by 1 crore 25 plus 5 lakh, which comes to 80 lakhs. So the workman's due to secured assets is 80 crores. The amount available to secured creditor is 4 crore minus 80 lakhs, which is 3 crore 20 lakhs. So only this much amount is available. Therefore, there is no payment available for government dues and unsecured creditors. Any doubts in this? Any doubts? There is preferential payment. There is overriding preferential payment. Overriding preferential payment is the payment which has to be done first over and above the preferential payment. See, normally the government dues and unsecured creditors have preferential payments. But the first thing will go to workmen, then to the secured creditor, then to the government, and then to the unsecured creditors. In this case, there is no money available for the payment of government dues and unsecured creditors, and therefore the company is liable to settle 80 lakhs towards workman due and 3 crore 20 lakhs towards payment to secured creditors, and therefore examine and state whether the following companies can be considered as foreign company under the provisions of Companies Act. A company which is incorporated outside India and employs agent in India but has no place of business in India. A company incorporated outside India having shareholders who are all Indian citizens. A company incorporated in India but all the shares are held by foreigners. A company which has no place of business but yet doing marketing through telemarketing in India. So the answer is, as per section 2, subsection 42, a foreign company means a company or a body corporate incorporated outside India, but has a place of India, whether by itself or through an agent, whether physically or through electronic mode, conducts any activity in India in any other manner, will be called a foreign company. Thus, establishing a place of business in India is an essential ingredient. Therefore, in the given case, the first case, the company has not established but employs through an agent in India does not mean it's a foreign company. So let's see, a company incorporated outside India will not be deemed to be a foreign company even though all the shareholders are foreign citizens, unless it has a place of business in India. A company incorporated in India, the first point says that even though all the shareholders are Indian citizens, If the company is incorporated outside India, then it will not form part of the Companies Act of 2013. Therefore, they are not deemed to be a foreign company. A company is incorporated in India and having all the shareholders as foreign citizens, even though the entire shareholding is by a foreign citizen, it shall be deemed to be an Indian company, even though it has not incorporated any business outside India. As long as the business is done in India, whether the shareholding is held by a foreigner or not, it continues to be an Indian company. I mean, the company continues to be an Indian company. The foreign company, if it has got, a place of business in India, they will also be called a foreign company. According to the registration of foreign companies rules, even if you carry out any activity through electronic mode and the main server is installed in India or not, it shall still be called a foreign company incorporated in India. So therefore, the following activities are considered to be activities carried out under electronic mode, and therefore, whether you have your server here or not, but if you happen to have any activity within India, so carrying on an activity being an essential part, so even though you don't have an office here, but you are using telemarketing offices for the purpose of doing business in India, you will be called a foreign company and will be guided as per the Companies Act of 2013, as though you are a company incorporated in India. Yeah, we'll go to the next question. Mrs. KA Limited, a listed company, proposes to acquire a plant for consideration other than cash from KK, a director. The managing director of the company identified Mr. JK as a registered valuer under the provisions of the law for the purpose of valuation. Mr. KK acquired the plant 48 months back from the partnership firm in which the spouse of JK is a partner. The managing director issued an appointment of JK as a registered valuer, examine and decide whether the appointment is valid, mode of appointment is valid, etc., etc. So let's go to the answer. There's a restriction on the part of the Companies Act relating to entering into a contract or an agreement or an arrangement by which you pay for consideration other than cash. A director, no company shall enter into an arrangement or agreement with a director of the holding of the company or its holding or a subsidiary or an associate, or a person connected with him acquires for consideration other than cash from the company, and the company is to acquire for other than cash from such director, unless, that is, generally there is a restriction. You can't do for consideration other than cash. You cannot enter into a transaction for consideration other than cash. However, it can be done if the general meeting approves it by way of a resolution, and the resolution is obtained prior to entering into an agreement. Therefore, getting a prior approval is mandatory if you have to enter into such a transaction. In this case, we are not very sure whether the prior approval is obtained for entering into a transaction. Also, when you enter into transaction in the general meeting, then the notice of the general meeting shall include the particulars, and it shall include the value of assets and whether it has been calculated by a registered valuer. The registered valuer shall not undertake any of the valuation if he is or has been or becomes interested in any time during a period of 3 years prior to appointment or 3 years after the valuation was conducted. In the instant case, as we see, he acquires a plant for consideration other than cash. You cannot enter into a contract with a director for consideration other than cash. However, it can do so if it obtains prior approval of the general meeting. It shall also have the calculation made by a registered valuer. As per further facts of the question, the managing director has identified JK. However, JK's spouse is also a partner, which is a related party. However, the plant was acquired 4 years prior to the transaction. And therefore, even though 3 years, the section says that if it is within 3 years, either from the date of his appointment or 3 years after his acquisition of the asset, if it is within 3 years, then you cannot do that. However, if it is beyond 3 years, you can do that. However, in this case, since more than 3 years has passed and KK has acquired the asset from the partnership firm, even though spouse is related, he can still be appointed as a registered valuer. There's no problem because the acquisition of the asset was more than 3 years old, or the appointment is more than 3 years old. However, as per section 247, such terms of the appointment for the valuer has to be done only by the audit committee, and in the absence of the audit committee, the board must do. In the instant case, the managing director has appointed, and therefore the appointment is not valid, even though he comes out of the tenure-wise restriction of 3 years because it was acquired 4 years back. The appointment is made by the managing director, which is not valid under the law. It has to be done only by the audit committee, and in the absence of the audit committee, it has to be done only by the board. Here, the managing director has appointed, and therefore the appointment. So we'll go to the next question. The registrar of companies, by a written notice, required certain information from REC Limited under section 206. On the perusal of such information, it observed that the complaints of investors were not being addressed for a long time. So, in the statement filed under Regulation 13 of LODR for the quarter ended March 20 and June 20, it showed that the number of complaints pending at the beginning and the end of the quarter were much more than disposed of during the said quarters. As you may see, that the quarter ended complaints beginning is 130, received is 50, disposed is 40, and remaining is 130. But if you see the next quarter, the number of complaints received is 60. That is, number of complaints also increased. The number of complaints disposed also decreased. Thereby, the number of questions, queries remaining unsolved becomes 160. Also, the ROC noticed from the report called from the audit committee that many complaints were filed with the audit committee by the employee under the vigil mechanism. The details of vigil mechanism was displayed in the website and board report. One of the requirements of the vigil mechanism is that the audit committee shall have free access, and the employee shall have free access to the chairman of the audit committee, and the disclosures have to be maintained in the board report as well as the website. However, ROC also noticed that one employee, Mr. Tappan, was reprimanded by the chairman of the audit committee for filing repeated complaints without purpose or no value. The ROC, on the basis of information available with him, passed an order for inquiry under the Companies Act after informing the grounds for allegation. Meanwhile, an extraordinary general meeting was conducted for passing a resolution for the purpose of conducting the statutory audit by the central government, which could not materialize due to the fact that the votes cast were in favor were votes cast against. However, 8 persons holding 20% share out of 120 members made an appeal to the tribunal that they have valid reasons for seeking the investigation, and such an application was supported by an evidence of the investigation into the affairs of the company. The tribunal passed an order for winding up as satisfied that it was necessary. However, 8 members holding made an application at the tribunal. Oh, this is just a repetition. So the question is whether the establishment of vigil mechanism need to be disclosed mandatory, and also whether reprimanding Taman for repeated complaints can be considered as a valid act. So the option available to us is, yes, it has provided the act of reprimanding, that is punishing Tapan, can be considered as valid as the complaints were frivolous in nature. No, disclosing in the board report is sufficient. The act of reprimanding cannot be considered as valid as the chairman does not have the authority to do so. Yes, the company, even though it does not have a website, it needs to create one and then disclose. The act of reprimanding can be considered as valid as the complaints filed by him were frivolous in nature. Yes, the company has a provided the company has a website. The act of punishing Tapan only on the grounds where frivolous in nature cannot be considered as valid. So the answer is that the company must have a website. The company's website must disclose that the act of punishing can be considered as valid because it is also said under the law that it has to be disclosed in the website as well as in the annual report, and the employees have free access to the audit committee. However, if in the opinion of the audit committee that such a repeated filing of complaints which had no value, which is frivolous in nature, then such a complaint can be disregarded, and person making such frivolous complaint, frivolous means without value, can be punished. So it has to be provided in the website. The act of the chairman for punishing the employee for filing frivolous complaint is valid under law. Any doubts in this? Any doubts? Yeah. Whether not mentioning of any reasons recommending by ROC can be considered as valid, and type of resolution were required to be passed by rate limited, and the investigation could have been initiated by the central government. So the question, the options that are available is no, as the reasons to be given in the order supporting the recommendation, special resolutions were required to be passed. No, as the reasons are required to be given in the order to support the recommendation, resolution with majority representing 3/4 in value is required to be passed. Yes, the giving of reason is optional, and with persons holding 90% share was required to be passed. Yes, as giving reason is optional for the investigation and depends on the discretion of the ROC. It is enough if they pass an ordinary resolution. So the question is very clear. Whether reason is required to be given, the reasons are not required to be given if it is passed at the version of the tribunal, and the ROC has reasons to mention that it is required in just and equitable that the inquiry has to be passed, and therefore reasons are required to be given in the order. However, for special reasons, it can dispense off with certain requirements. However, the registrar has a power to say, instead of saying it in detail, he can say that it is just and equitable that an inquiry is required to be made by him. So registrar has got wider powers, and special resolution is required to be passed by rate limited. Any doubts in this? The next question is whether the application to the tribunal was filed by adequate number of person, and whether the central government sole discretion for ordering the filing of complaint. Yes, the required number is persons holding 10% or more. Here persons are holding 20% or more, and therefore the application was filed by adequate number of members. The central government has the power to mandatorily order investigation, and there is a discretionary power for ordering investigation if there is a report received from ROC. So therefore the question is asking if the registrar needs a particular number of persons to file. Yes, minimum 10% holding shares must file. If it is less than 10%, then it become a minority shareholder. So therefore no suit shall lie at the instance unless the registrar is of the opinion that an inquiry is required to be made because the way in which the company is carrying out its activity is prejudicial to the interest of the members or the general public, then this 10% is also not required. However, the registrar or the tribunal must be satisfied that carrying out the activity of the company is prejudicial to the interest of the company. In that case, the numbers are not required. It can do it suo moto. However, it can do so by way of an application filed by a member holding not less than 10%. In this case, members holding 20% have coming to file a petition. So therefore, it is perfectly valid. The central government and the tribunal has discretion to pass an order, even though whether a report is received from the ROC or not, it can do so at its own discretion. Any doubts? Whether an opportunity of being heard is required to be given for passing an order. Here, no opportunity of being heard is not given to ROC in case of tribunal as it is required to be given. There is only discretion to conduct investigation, but before passing an order, it is the duty of the tribunal to give an opportunity of being heard to all the persons affected. The tribunal can call for the members, it can call for the company, it can call for the ROC. It can pass an order ex parte, but not without being an opportunity of being heard. And if a person has passed an order ex parte, that is the tribunal passed an ex parte order, and the affected person comes to the tribunal and says that there are sufficient causes for not being present and therefore the case has to be opened again, the tribunal can do so. Please note that to order an investigation is the discretion, but cannot pass an order without giving an opportunity. Okay. So we'll move over to the next question. A petitioner presented an application in July 2017. An order was passed in September. Aggrieved party filed an appeal before NCLAT in 2017 November. The appeal was pending before NCLAT for 6 months. Examine whether the filing of appeal before NCLAT is in order, time period within which the NCLAT should pass an order. Any person aggrieved can file an appeal before the appellate tribunal. That is, NCLT has passed an order for winding up. The person aggrieved can appeal to the NCLAT within 45 days from the date on which the copy of the order is made available. However, extension of 45 days, further 45 days can be given at the discretion. Whereas under section 422, that every application shall be filed before the appellate tribunal and it shall be disposed of expeditiously as possible within 3 months or such extended time as may be required by the tribunal. So in the instant case, filing of a tribunal, filing of an appeal before the National Company Law Appellate Tribunal is valid because the appeal is made within 45 days. That is, it was made within actually a 1 month period. So therefore, it is, permissible under the law to file an appeal. It shall be disposed of. That is, once an appeal is filed, the NCLAT has the powers to dispose it of within 3 months. However, it can do so by extending it for another 90 days if the NCLAT or the chairperson of the tribunal or the president of the tribunal finds it necessary or there are some reasons for such extension. In that case, the tribunal has the power to pass order even after the extended period of time. Question number 7. MNC Limited, whose paid up capital is 4 crore, has issued rights at the ratio of 1:1. The company is listed in Bombay Stock Exchange. Whether the company is required to appoint an audit committee, if yes, draft a suitable board resolution to the appointment. As per the provisions of section 177, which talks about the composition and the requirement to constitute an audit committee, every listed company, irrespective of the amount, and every class of companies as may be prescribed, shall constitute an audit committee. So, irrespective of the size, since the company is a listed company, it is required to constitute an audit committee with minimum of 3 members, of which majority shall be independent directors. The members of the audit committee must be financially literate and the chairperson shall be with a person to read and understand the financial statement. So let's draft a board resolution for the constitution of the audit committee. So as I said in some of my previous sessions, when you draft a resolution, it must have clarity, must have the correct section number, and wherever applicable, it must include the other laws also. So resolve that pursuant to the provisions of 177 of the Companies Act, read with the applicable clauses of the listing agreement, the audit committee be and is hereby constituted with the following members. So and so, so and so, so and so must be appointed as the members. I'm sorry, point number 6 is not valid. Point number 5 is not valid because it can consist only of directors, and the managing director and the financial executive shall only be an invitee to the meeting. So the addition of the word invitees may be added. It can have non-executive directors. However, majority shall form part of independent directors. It is resolved that the so-and-so member, an independent director, be the chairperson of the committee, and further resolved that the quorum of the meeting shall be 2 members personally present. It shall consist of minimum of 3 members, of which the quorum shall be 2 members. It is further resolved that the terms of reference shall be as per 177.4. The 177.4 provides for what are all the terms that the audit committee can do. It shall also specify what the audit committee power is empowered with the powers to do. It shall conduct discussion with the auditors, both statutory and internal audit, and shall satisfy itself of the internal control system, the scope of audit, etc. It shall also review the financial statements, both quarterly and the annual, and recommend it to the board with its appropriate recommendation. And it can have access to the members of the management for seeking necessary information. Resolve further that the company secretary shall be the secretary to the committee. The chairperson of the audit committee shall be present at the annual general meeting to give clarifications on the financial statements. The board report shall include the particulars of the constitution of the audit committee and the details thereof. And you can add what more and what not to the resolution.